Today we are going to learn about a very important equation in accounting, and that is asset equals to liability plus owner's equity. Now, of course, there are many definitions of assets which you might see on the textbook. Any resources which is belonging to the company and which has a future economic resources or rather economic value is what we call it as an asset. So a car is an asset, a furniture is an asset, a computer is an asset, a house is an asset. Now let's say, for example, so let me give some examples of assets. A car is an asset, okay? Cash is an asset, okay? And likewise, there are so many physical, tangible things. Now, on the other side of the equation is the liability. What is a liability? When we owe somebody, when we used somebody's services, some institute services. Let's say, for example, I borrowed money from the bank and I owe the bank, let's say, for example, $10,000, right? So that's a liability. I owe the bank $10,000 and I have the responsibility to pay the bank $10,000. It's a liability. And what is owner's equity? Owner's equity is something which belongs to me, to the company, right? For example, I take the car as an example. Here's the car, all right? And I bought this car which is worth $10,000, okay? Since I didn't have $10,000 in cash, I borrowed $5,000 from the bank, okay, and from the bank. And the rest of the money, $5,000, is my own money, my own cash, own money, okay? So the $10,000 is equal to the car, the asset value of the car is equal to the bank's money plus my own money. So this side tells you the ownership, okay, and this side tells you the asset. In accounting, assets, when the asset value goes up, it is always debit, recorded on the debit side. Of course, we are going to learn about the double entry. In double entry, any transaction affects two accounts at any given time, right? Minimum two accounts. So whenever an asset value goes up, it's recorded on the debit side. And whereas the liability and the owner's equity, that's the ownership side, will always be on the credit side. When it goes up, it's always credit. So using this principle, I'm going to fill in the blanks, which we did on our previous video, right? As you remember, this is part of earning. Well, we said accounting has two arms. One is the earning arm, one is the spending arm, okay? When we earn, we get cash, and that is our income, right? The source of income is the cash. So as I told you before, when an asset, which the cash is an asset, when cash goes up, it's always debit, right? When we do our business, when we sell. Earlier I took the example of buying and selling. I'm in the business of pens. When I sell a pen which is worth $10, I get the cash from the customer, which is $10, right? So because the cash goes up in my account, so therefore I debit my cash account, right? The cash is debit, and that is equal to the income account, which is my revenue account, which is credit. So therefore you might see here, in double entry, debit equals credit, always, all the time. So the debit account at the time of me earning is the cash account, which is debit, $10, and my revenue account is credit, which is $10. Now, if the customer doesn't want to pay the cash now, then it's going to be the accounts receivable. So always keep it in mind, assets, car, cash, and even accounts receivable are assets. So if the cash is not being paid by the customer, he is going to pay that later. So if the customer is going to pay that later, it is going to be accounts receivable. So therefore the accounts receivable goes up, it is debit. And of course the other side of it is going to be the revenue account, which is credits. Now let's think about the other side of the spending, or the other side of the accounting, which is the spending side. As I told you before, it is when we spend it for either for assets or expenses, right? When we spend for assets, we spend our cash. Either I spend the cash now, okay? So as you see here, if my cash goes up, it is debit, and if my cash goes down, it is credit. Stop it.